Fine art can be more than simply a lovely object to look at in a museum. For certain astute investors and collectors, it can be a valuable asset class. This is particularly the case for the latest generation of millennials, who are among the most knowledgeable art investors. Welcome to Lux Life TV, the passport to luxury living. We are going to talk about fine art throughout this video, including what makes it pricey, what kinds of art you may buy, and whether or not it's a wise investment. First things first, what is considered to be fine arts? Fine art can be defined as any creative expression, even if it isn't always beautiful, that is made purely for intellectual or aesthetic reasons as opposed to practical ones. Fine art can also be defined as the use of artistic talent and inventiveness to produce something aesthetically pleasing. In the past, painters produced paintings for wealthy clients. However, an art gallery now pays to commission a show from one of its stable artists. After that, a lot of money is spent on concert promotion in order to increase revenue. Remember that the term fine does not always imply that the artwork is of high quality. It speaks about the purity of the art form, such as sculpture, painting, or sketching. Is it wise to invest in art? Even if purchasing art can be expensive, it might still be worthy of a place in your portfolio. There is not much of a connection between the stock and bond markets and the art market. When diversifying their investments, investors should specifically be searching for it. The state of the financial markets has little impact on the art market, whether they are trending upward or downward. In the first half of 2022, art auctions were reaching new records while stocks and bonds were falling. Art is a fantastic way to protect yourself from inflation. Rich people want to safeguard their riches by investing in tangible things like real estate or works of art. Because of this, during the recent spike in inflation, auction values have increased significantly. Furthermore, investing in art can yield positive results if you are selective, diversify your collection, and hold onto your pieces for a long time. Instead of the market-beating returns that the art indexes boast about, investors in art should anticipate returns that are more comparable to those of bonds. Things to consider before purchasing artwork. Purchasing a work of art involves investing with the hope that demand for it and related works will rise more quickly than supply. It's not as simple as it seems. Additionally, you can't just walk into your neighborhood antique shop and pick up an actual Munch or Monet for a few bucks. It would cost millions to purchase an artwork by one of those artists at auction. You might need to put off creating art for some time. In the event that you do manage to purchase an item that appreciates in value, the art market is not very liquid. If you wanted to profit from your investment, you would usually have to wait to sell and pay a broker or auction house hefty fees for selling your holdings. Art needs to be maintained. Usually, art is a material, hard object. In contrast to immaterial possessions like retirement money, art occupies physical space. The art must be maintained and cared for in order to keep its worth. You should be aware of temperature, humidity, sunlight, and other elements that can damage the artwork if you plan to hang it in your house. You can choose to have the work stored in a climate-controlled environment for a cost by hiring a storage business. The force of tangibility is provided by art. The majority of people are generally aware of art as a physical, actual asset. Investing in items they don't understand is a common mistake made by investors, but art is unique in that it is genuinely subjective. Investors in art have the added advantage of being able to see their assets on a daily basis in a way that is not possible with stocks and bonds. There are numerous works of art that are not widely adored yet or worth millions. Moreover, art is regarded as a safe haven for anyone seeking a legitimate haven from inflation. When buying or selling artwork, there are a number of additional charges to take into account, such as sales tax, transportation costs, authentication and appraisal fees, as well as insurance. Increase your passive income by making art loans. There are places in the world of art dealerships where people may establish passive income streams, so buying artwork doesn't have to be the end of your journey. Lending artwork to museums or auction houses to promote the piece and raise the collection's worth is one strategy to potentially generate passive revenue. Several art collectors who are passionate about a particular artist might generate substantial income by regularly sending pieces from their collection to exhibitions across the globe. Giving up artwork to a gallery or museum enables you to connect with more people in the profession, share your collection with communities, and perhaps even get tax benefits. How to invest in art for the first time. Galleries and auction houses make it easy to find art to buy. You might also look at regional art fairs. You can find artists you like through online publications and social media platforms like Instagram too. You can also purchase artwork straight from the websites of artists. Alternatively, you may explore the realm of NFTs, which stand for digital art ownership. Investing in art can be done in a number of forms, with different levels of risk and return. Thank you for watching Lux Life TV. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Let's meet again with another interesting video.